is James Hirecheck with this week's Autochartist Weekly Forex Futures and Equity Market Recap for the week ending July 20th, 2012. Greater demand for higher yielding assets drove up higher risk currencies, commodities, and equities for much of the week as speculators increased bets that China's central bank and the U.S. Federal Reserve would implement new stimulus measures to boost their economies. The U.S. dollar also fell under the pressure of additional stimulus from the Fed. Long currencies, commodities, and equities was the strategy that worked from Monday through Thursday, but on Friday the reality of the Eurozone sovereign debt crisis reared its ugly head once again, and all three major asset classes finished the week on a down note. On Monday, the GBP USD formed an emerging triangle chart pattern on the 1440-minute chart. The strength of the rally late last week put this currency pair in a position to break out to the upside of a downtrending resistance angle at 155.92. A move to this price completed the chart pattern, setting it up for further upside action. On Tuesday, our focus shifted to the Australian dollar. The AUDUSD Forex pair also formed a completed triangle chart pattern when it broke through the resistance line of a triangle chart pattern on the 1440-minute chart. Autochartists determined that based on this formation, a move to the forecast level at 105.43 is likely over the near term. As of Friday's close, we did see some pressure in this currency pair, but the position is basically still intact, and we're still looking for further upside action. Moving to the stock indices, on Wednesday, the E-mini Dow Jones futures formed an emerging triangle chart pattern also on the 1440-minute chart. Our technical research indicated that this chart pattern was indicating a slight bias to the upside. We did get the breakout through resistance, and now we're looking for a possible move to 13,226 over the near term. Again, if demand continues for higher yielding assets, or if the rumors persist that the central banks are going to provide more stimulus, then this index should move higher. But if traders are afraid or concerned about conditions in the Eurozone, we could see the Dow Jones E-mini back down into this triangle formation and form a support base once again. Later in the week, we moved on to the E-mini Nasdaq 100 stock index futures. This contract formed an emerging pattern on Thursday, and we were looking for it to challenge or break out through the resistance line of this triangle chart pattern on the 1440-minute chart. We did get that breakout the following day, so this is Thursday's action. The market went through resistance solidly, but there was very little follow through to the upside. On Friday, the market was poised to move higher, but the negative news out of Europe triggered selling pressure as traders bailed out after this strong 3-day rally. So now we are back inside of the triangle with a little bit of downside momentum building. However, there is no sign at this time that the trend is changing. So if we do get, again, rumors of more aid from central banks, then we could see this Nasdaq contract higher once again next week. However, if there are no hints of any additional aid from the Federal Reserve, and if the interest rates in Spain continue to rise and traders continue to worry about the collapse of the Spanish economy, then we could see another sell-off in the stock index futures. This has been James Hirecheck with this week's Autochartist Weekly Forex Futures and Equity Market Recap for the week ending July 20th, 2012.